India is 21. The effect of change of foreign exchange rate. The effect of change of foreign exchange rate. What is this? Entity may carry on foreign activities in two ways. It may be have transaction in foreign currency or it may have foreign operations. So transactions I have or currency you have. What do you mean, sir? I buy and sell foreign currency. It's my exchange rate. Or I do operation. I buy goods from foreign country and sell goods in India, or buy goods in foreign country and sell in foreign country. Such a way, the operation transactions are in foreign currency. In addition, entity may present a financial statement in in the foreign. And sometimes the company holding, we may have most of the holding in foreign country itself. So due to that, what some financial statement we need to present as per the foreign currency USD or euro, such a way it may become mandatory. So in that case, we need to prepare the balance sheet in that foreign currency itself. The objective of the standard is to procedure how to involve the foreign currency transaction, foreign currency operations in the financial statement of the entity, and how to translate the financial statement into presentation currency. Presentation currency is in India, dollar, rupee. But if we have the transaction in foreign currency and we have operations in foreign currency and we have a balance sheet in foreign currency, but we are supposed to give it in our base currency, that is rupees. So how to do it? That is being defined in this standard. The principal issue of which exchange rates to use and how to report the effect of changes in exchange rates in measurement. So mostly there are some issues. That issues being set here. What is the issues? Exchange difference and foreign currency. Exchange difference, a difference resulting from translation given number of units of one currency into another currency and the different exchange rates. Exchange difference one. Sure. Usually, when you have convert dollars into rupee, there is two rate. What is that? Buying rate, a selling rate. What? Sir, I want to buy the rupees. I want to buy, example, 1 rupee is equal to 80, $1 is equal to 80 rupees. If I want to buy it, I want to pay 81 rupees to buy it. If I want to sell it, I will sell it in 17. Why? Always the selling dollars is less, buying dollars is high. You want to buy something, you want to pay something extra. If you want to sell something, I will take something out of it. Such a way, commission 1%. Such a way, this is the foreign currency difference. And not only this, currency, the dollars exchange is not unified all over in the world. Every country has its own base dollar rate. Not you can buy the same dollar, somewhat different. Or it's not a total different, maybe a 0.05% different in various countries due to the abundance of the currency. So this is what happens. Okay. So this is how it is being the difference is being calculated. But for using the difference also you need to adjust it and come to a base currency. And foreign currency is a currency other than the functional currency of the entity. Functional currency is rupee. Other than rupee, what all the currency can be done? It is foreign currency. So it is a Bitcoin is a currency. No. It's a cryptocurrency. No, no. Cryptocurrency is not a currency. It is not a legal binding as per this foreign currency. And this as per when new US has accepted this Bitcoin. So US has accepted now. There has been issue and India's the international accounting standard is dealing with it how to recognize that Bitcoin, but Indian accounting standard has denied the recognition of Bitcoin as a currency. It is not been considered as currency. It has been considered as some kind of other assets. If you had it. Functional currency. The functional currency is the currency of a primary economic environment in the entity operates. So, in a country, what is it functional currency? That is rupee is a functional currency in India. The primary primary economic environment in which entity operates is normally the one in which the primary generates and expense acquisition. So the primary economic environment in which entity operates is normally the one in which primary generated and expended cash. Okay. So cash is what generated, functional currency. Entity consider the following factors to determine the functional currency. What are the factors? The currency. The mainly influences sale price of the goods and sale price of services that will often be the currency in which sale price of goods and sale price of services are denominated and settled. So you see the sales, and see the what is the substance. Majority, what currency it is used. It is a currency. The country which competitive forces and regulations mainly determine the sale prices of goods and services. So what? So which country is dominating? So example, a person in India is doing transaction all over the world, mostly in Europe, and they are dealing with euro. Now the question is whether it is a rupee or euro. Now, which country's competitive forces and regulations mainly determine the sales? India. Why? Because in India, you having employees, for them you are paying as per PF, ESI you are paying. Not only that, you receiving back in India and you putting in the account in India, everything in rupees. Spending in rupees, you are receiving the amount in dollars and converted to INR. And you are accepting the rules and regulation of India, and you are a citizen of India, and you are paying income tax in India, and you are resident in India, you are a taxable resident. Then in this case, the currency you are going to use is rupees. Okay. The currency that mainly influences labor, material, other cost provisions, and goods and services will this will often be the currency in which the costs are denominated. So you should understand this. What is a labor, material cost, provided goods and service that all to be considered, which influences major influence on this currency. That currency to be considered as a financial currency. The entity financial functional currency reflects the underlying transaction, what underlying transaction, underlying events, underlying conditions are relevant to it. According to ones determine that functional currency is not changed unless there is a change in those underlying transaction and events and conditions. So when there is a change in the underlying transaction, and when there is an event that forces to change the transactions, and when there is a condition that is existing change in functional currency, unless these are the three things correlate and that happened, then you can think of changing the functional currency. Unless and until the transaction events and conditions are there to influence the change in changes, then you don't need to think about changing the functional currency. The reporting foreign currency transaction in functional currency. So how I'm using rupees and now I have a problem in dollars. I have pounds, even all the currencies are there. On that currency, how are I going to recognize Indian currency? If you think the foreign currency transaction can be recorded on initial recognition in the functional currency by applying the foreign currency amount, the spot exchange rates between functional currency and foreign currency at the date of transaction. Come on. Applying the foreign currency amount, the spot exchange rate on that day spot, what is the buying rate you see, and that between the functional currency and the functional currency is rupee and foreign currency is dollar in case. And the spot rate on that transaction, what is the rate of transaction? You convert it in Indian rupees. Then that transaction, yes, that currency on the spot rate on that specific date, when that transaction, the event, that condition arises, that is the date. Now considering you consider $100, no $100 converted into rupees, 8,000 rupees converted. At the end of the specific period, what is it? The foreign currency monetary item shall be translated using the follow closing rate. Always a closing rate should be considered. Okay. Okay. Foreign currency monetary items can be translated into closing rate on 31st of March. And what is the rate as 31st of March? SBA buying rate. As per the SBA buying rate of dollars, we should consider on what $1,000 I hold in the $1,000 converted into SBA buying rates on 31st of March. You can do it. Non-monetary items that are measured in terms of historic cost in the foreign currency shall be translated using exchange rate and data transaction. So non-monetary items are measured. How? Historic cost. What is the buying rate? Historic cost you need to measure and translated using exchange rate. What rate need to buy? You think of that, and that to be translated to the transaction. Yeah. Non-monetary items are measured. The fair value of foreign currency shall be translated using exchange rate in the date in which fair value is measured. Sir, I don't know the fair value of this monetary item. Non-monetary items. I bought it in some date and now I'm this many dollars. That is historic date. So now considering this transaction, historic the cost when I bought the car and historic cost is recognized on the date, what is the spot rate? As per that spot rate, I'm coming into definition. I'm taking into definition. Taking into definition. This is what historic rates is. In case of foreign currency, in this case of foreign currency, in non-monetary cases, in fair value. So I don't know the historical itself. I'm considering the fair value. When I recognize the fair value, a date of recognition of fair value on that day, what spot rate, that rate I should consider. So you understand? Okay. The exchange difference arising on settlement of monetary items and non-translating monetary items at the rate different from those in which they were translated to initial recognition during the period or in the previous financial statement shall be recognized in profit and loss account in the period in which they arise. Sure, there is a gain arising, there is a loss arising. Where should I recognize? Foreign exchange fluctuation gain, foreign exchange fluctuation loss. That to be considered and that to be booked in the P&L account. Check. When a gain or a loss of a non-monetary item is recognized in other comprehensive income. The exchange component of the gain or loss shall be recognized in other comprehensive income. Sir, I'm not paying to P&L. In other comprehensive income coming, one of the thing coming into other comprehensive income, valuation of asset, mostly valuation. Now, the revaluation of asset happening. So on that revaluation, there is a exchange gain and exchange loss is coming. Then what are the comprehensive, other comprehensive income, we should consider gain or loss. Conversely, when a gain or loss as a non-monetary item is recognized in the profit and loss account and any exchange component of that gain or loss shall be recognized in profit and loss account. When and you have to consider the non-monetary item in P&L, not in the comprehensive income. Then now the next you that is change in the non-monetary item where you want to go comprehensive income or P&L account. Once it is being charged in the P&L account, it should always be charged in the P&L account itself. The exchange difference arises from the monetary item of the forming part of the reporting entity. Net investment in the foreign operation shall be recognized in the profit and loss in a separate financial statement of the financial entity or the individual financial statement of the financial operation as appropriate. One. Or exchange differences, what monetary item is happening. Okay. Where you reporting entity net investment we have you should see. What is the net investment? What is the monetary items? What is the foreign exchange gain? You should see and that should be disclosed in P&L account. Yes, sir, now what is happening? What's the problem? P&L account is separate financial statement of the reporting entity or the individual financial statement of the financial operations appropriate. You should do two financials, one foreign currency in almost in everything in foreign currency, then almost converted into Indian rupees, two financials. In this financial, when you're converting, you should show that this dollars are there, this is the rupees is there. When converting this, I got this gain and loss. You should show it. In the financial statement that include the foreign operations and reporting a reporting entity consolidated financial statement when the financial operation is subsidiary. Such exchange difference shall be recognized initially in other comprehensive income and reclassify the equity to profit and loss or disposal of the next investment. So such an exchange difference are initially recognized other comprehensive income and reclassified to equity to profit and loss on the disposal of the net investment. What do you saying? So previously I considered in the comprehensive income, sir. Okay. Now I transferring into reclassifying to equity from equity. Then what happened when you reclassify from equity, you should transfer it to P&L account. Oh my God, yes. You can't just throw away. When you always a net effect will come to P&L effect. That is being said here. I'll say again. In a foreign operation, such a foreign exchange difference shall be recognized initially in other comprehensive income and reclassify from equity to P&L loss on the disposal of the net investment. Sir, I having an investment. But investment, I held it, and then after, I usually when there's fluctuation gain, I transferred everything to comprehensive income. Okay. Now, when a situation arises, I'm going to dispose this investment. What I'm going to do when they dispose the investment, I should take the changes what I did in the comprehensive income, take it directly and put it in P&L account. This is you should do. Presentation currency. The presentation currency is a currency in which the financial statements are presented on rupees, dollars, something. So what currency you want to present, that currency you should say. In the entity shall present the financial statement in the currency. If the presentation currency differ from the entity's financial currency, it translates a result and financial positions into presentation currency. Yeah, so we should see which currency you should present and translate the result to the financial position to always the presentation currency. Financial position should be presented in the presentation currency. The result of the financial position of the entity whose financial currency is not in the currency of hyperinflation economy shall be translated into different presentation currency using the following percentage. Sir, in that situation, what in the financial position of that company that is due to hyperinflation of economy. What do you do? There is a great change in the economy, which is not able to determine the price. Then what do? Assets and liability of each balance sheet presented that is including comprehensive shall be translated into closing rate and the date in which balance sheet happened. So on the closing date, what is the rate? As per that rate, all the items of the balance sheet to be done. So income and expense of the statement of profit and loss percentage shall be translated the exchange rate at the date of the transaction. So when the transaction happened and that date, what is the rate you should transfer? All resulting exchange difference shall be recognized other comprehensive income. Usually what we do, we will charge it to P&L account. Now, due to hyperinflation, you don't need to charge to P&L. You can charge to comprehensive income. That's very good now. The result of the financial position of the entity whose functional currency of the currency of hyperinflation economy shall be translated into different presentation currency using the following procedure. How all the amounts, that is all the assets, all the liability, all the equity item, all the income, all the expenses, all are including comprehensives shall be translated into closing rate of the date of the most recent balance sheet except that when the amount is translated in the currency of non-hyperinflation economy, the comprehensive amount shall be those that we presented at the current year amount in relevant period financial statements. That is, not adjusted subsequent changes in the price level or subsequent changes in the exchange rate, not adjusted subsequent changes of the price level and subsequent changes. So due to inflation, I would not able to do oops, sir, hyperinflation, sir, whatever. Closing rate, what is the rate? Everything put the units into closing rate and complete compute it. That's it. And this is what they said. Very good point. Translation of foreign operation. What is the translation of foreign operation? The incorporation of a result of a financial position of financial operation with the operate reporting entity follows normal consolidated procedure. Is following normal consolidated procedure, in such as elimination of intergroup balances and intergroup transaction in subsidiary. So first of all, prepare a balance sheet. What you need to eliminate intergroup transaction, intergroup balances. You should first close it off while consolidating. Yeah, because when you consolidate, you book all the intergroup. I want to give him 100 rupees. He want to give me 100 rupees. No, knock off. However, the intergroup monetary asset whose short-term or long-term cannot be eliminated against a corresponding intergroup liability without showing the result of currency fluctuation in the consolidated management. So liability asset. Current asset can't be strike off with long-term liability. Then current liability can't be strike off with long-term asset, current non-current asset. So this is the problem because when you do so, that may affect the currency fluctuation. This is because of the monetary item present and the commitment to convert one currency into another and express the reporting entity to gain or loss through currency fluctuation. So this is all due to the commitment to current from one currency to another currency. We want to convert it. For that commitment, we are sitting here. Disposal of partial disposal of foreign operation one. For the disposal of foreign operation, the cumulative amount of exchange difference resulting in the foreign operation recognize other comprehensive income and accumulated in separate component of entity shall be reclassified from entity equity to P&L account, and then gain and loss disposal is recognition. Hey, I going to dispose of foreign operation. What to do? So disposing it, use the foreign gain asset, whatever the you should put in the P&L account. So after comprehensive income, no, when you are disposing it, that should come to P&L account. It shall go to the comprehensive income. On disposal of a subsidiary that includes foreign operation, the cumulative amount of the exchange difference relating to foreign operation that have been attributed to non-controlling interest shall be de-recognized and but shall not be reclassified to P&L account. That is good. Okay. On disposal of a subsidiary in a foreign operation, the cumulative amount of exchange difference arising in the foreign operation that has been attributed to non-controlling interest shall be re-recognized and shall not be reclassified to P&L account. Sir, I'm not holding assets, but I'm holding control. So I'm losing the control. What to do? Though the losing control should be considered in P&L account. No, 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 no. On the partial disposal of subsidiaries that includes foreign operation, the entity shall reattribute the proportionate share of cumulative amount of exchange differences and recognition other comprehensive income to non-controlling interest in the foreign operation. In any of the partial disposal of foreign operation, the entity shall reclassify the profit and loss only to appropriate share of cumulative amount of the exchange difference and recognition other comprehensive income. So when you're disposing of a partial thing, not the whole thing, a difference arising should be recognized in other comprehensive income. So the non-controlling interest of one number. Usually I said non-controlling interest, I can't classify to P&L. So what I can do, it should be transferred to what comprehensive income. In other non-partial disposal of the foreign operation, entity shall classify the P&L only in the proportionate. What is the proportionate? That cumulative amount only. That exchange difference alone only. You should recognize in other comprehension, not the whole amount, only the partial amount. What is the partial disposal amount only you should recognize. Appendix B, Ind AS 21 addresses how to determine the date of transaction for the purpose of determining exchange rates to use initial recognition of relevant asset, expenses and incomes on the recognition of non-monetary asset or non-monetary liability arising from the payment of receipt of advance consideration in foreign currency. In foreign currency, you should see the non-current. What is a monetary asset, non-monetary liability? You should see arising from the payment of receipt of advance. What is the advance you make? What the advance? What is the foreign currency? You should see. So, what is the date of transaction? How the purpose of determining the exchange rate? What is the exchange you see? And what is the initial recognition you see? And what is the related asset you should see? And asset related expenses related income you should see. And what is being T recognized? What is a non-monetary asset and what is a non-monetary liability arising from the payment receipt of advance consideration foreign currency? These all need to address in the transaction for the exchange rate to use the initial recognition for right asset. So how this asset has been recognized? How you going to do it? You should see the data of transaction for purpose of exchange to use the initial recognition of the related asset and expense of income as a part of it. It is a date on which entity initially recognizes a non-monetary asset and initial recognition of non-monetary liability arising from the payment and receipt of advance consideration. If there is a multiple payments of receipt or multiple payments of advance, the entity shall determine the date of transactions on each payment and each receipt of advance consideration. So each payment and each advance you should take in consideration. What is the date of the transaction? That is very important. So when the transaction happens, so on that transaction, that is exchange rate. So you can put any other date. So transaction day should consider on the transaction date. You should consider what is a non-monetary asset, what is a non-monetary liability that is arising, and what when for that when you make the payment, when you receive the advance consideration. So the all the multiple payments, all the multiple advances, everything should be determined based on the date of transaction. So when the transaction happened, when the payment made, when the receipt of each and the date of transaction on that rate, what is the exchange rate? That should be considered. Not the event. Actually, when the transaction happening, what is the exchange rate? We should have considered that liability arise that day itself. So that is no. When I make the payment, that is the date of considering the transaction, dollars, currencies, conversion happens, please. Happens and taken place. Thank you. Welcome. Om Namah Shivaya.